Hey everyone, welcome in to another daily editorial here on the KE Report and another company update, this time from Scorpio Gold. This is a company focused in Nevada, going to be a near-term producer. The company, as we've chatted before about, has consolidated this Manhattan district as well as holds the Mineral Ridge property. We're going to get an update from both of these assets, especially from this Manhattan district, as we've had drill results as well as growing the land package. A lot for us to talk about on that front. We are chatting with the CEO, Zayn Kalyan. Scorpio is traded on the TSX Venture Exchange under the symbol SGN, on the OTCQB under the symbol SRCRF, and the Frankfurt Exchange RY9. Zayn, let's start off with this Manhattan district. October 24th, you released some drill results, 4 holes in total. Headline being a little over 6 grams per ton gold, over 9.4 meters. Let's start with the drilling there. Just remind everybody the goal around this year's drill program at this Manhattan project, please.
Yeah, so really with us stepping in February and recapitalizing the company and moving everything forward, our biggest focus has been Manhattan. That's where we see the biggest potential. We really do feel that there is district scale opportunity. We're very confident to say that we're targeting at least 2 million ounces, and I think we're ultimately believe that there is more there than that. So the purpose of the drill program this year was really 2 parts, confirmatory as well as some step out. And historically, a lot of the drilling, the over 100,000 meters of drilling that's been done historically across 1,200 drill holes, was 95% RC. So very little diamond core, and having that core really would allow us to confirm our interpretation, the model that we built, leveraging that historic drilling, get a better understanding of structure, and then ultimately enable us to work forward on new targeting for a much more expanded drilling program in the new year. So yeah, program went very well. We're very happy with the results. I think ultimately we confirmed a lot of the structure in the model where we were expecting it. We did encounter the Reliance fault, which really is the controlling structure for all the mineralization in the past producing pits, as well as along strike between the Goldwedge and the Manhattan. That's kind of leads me to the second goal. A big part of it was trying to confirm the mineralization or continuity of mineralization between Goldwedge and Manhattan. Goldwedge is the project that Scorpio has historically owned. It's an underground mine with a 400 ton per day permanent gravity mill. And then you have Manhattan, which is the former Echo Bay mine that we acquired from Kinross in 2021. And the 2 assets have never been owned by the same company. So this was kind of the first time they've ever been consolidated. No one's ever done any drilling kind of in between the 2 deposits to really confirm the structure. And we were successful in doing so, and I'm pretty excited with the results. We put out, like, I'm going to say 5 of 9 or 8 holes. We should have the remaining 2 coming out, or 3 coming out in the next couple of weeks. And beyond that, we're going to be working towards getting our main resource out early next year, Q1 2025. And there's been a lot of work that's kind of gotten us to this point. There's obviously a lot more work to do to kind of further build the resource, but with our new expanded claim package and everything we've been working towards, we're pretty excited to move things forward.
Yeah, Zayn, it's nice to see, the area between Manhattan and Goldwedge starting to get filled in, and looking forward to that updated resource. But one other thing you just mentioned there at the end was the updated land package. You took this from 1,876 hectares to, you added another 2,716 hectares. So now almost 5,000 hectares. You got 4,779 hectares of land. So you biggie sized your land package, and some of this came with the database where Kinross had done some work on here over the last few decades. Maybe talk about why you grew the land package to such a degree and what the prospectivity is of this new land.
Yeah, so as we've kind of been working through the database, so we inherited nearly 4 terabytes of data from Kinross. That a lot of that was the 1,200 drill holes, but there's also been a lot more work beyond that. They did a lot of geophysical survey, full multi-element soil sampling analysis across not only the Manhattan claim block, but also beyond the boundaries of that to claims that they used to hold in the teens. And then beyond that, they actually put 18 holes into some of this expanded claim block as well. So I think ultimately, Kinross divested of the project just because it wasn't the time and place for management of the company. They're very focused on kind of expanding outside of North America and kind of moving on beyond. That was why we were able to pick up the claims. Second, owning the Goldwedge was also kind of a catalyst for consolidation. So you kind of needed both projects to make it work. And because we own that, we were the logical buyer. So ultimately, where I'm going with that, I think, is that those claims were held by Kinross. They did put money into them, and some of the we're in the process of doing QA/QC on a lot of those results and doing the kind of interpretation. We hope to kind of put out a lot of that in the coming weeks and months, and re-release that stuff. But ultimately, I think we're pretty excited with the data that's on that package, and I think it really does give us this district scale opportunity. We're talking about nearly 5,000 hectares that's on the same Manhattan caldera that Round Mountain exists on, 10 miles to the northwest. Round Mountain is a historically 16 million ounce mine. There's 3 million ounces left, is our understanding, and I think ultimately we believe that this is kind of the blue sky potential for that infrastructure. There's a lot of infrastructure at Round Mountain, and I think we're well situated to be kind of one of the next deposits that could be exploited in that area.
So, Zayn, how do you go about handling this much larger land package now? You're focused on resource growth in and around the resource, but as you said, opens up that blue sky potential. When and how would the company get to that blue sky potential?
Yeah, I think it's going to take time. We're going to have to obviously work towards it as we have to build a significant resource. And I think the maiden resource that we're aiming to put out in January is the first step. We're going to do a much more expanded exploration program with infill and step out next year on the back of that re-rate that we hope will come with the resource. But then ultimately, I think as with any kind of junior mining company, these assets are obviously cash hungry, and you always need to feed the beast. And you're always trying to build a big resource. I like to kind of say that Manhattan will need significant investment. And when I say that, I'm calling it $10 million to really get it to kind of that north of $250-300 million in value. And in today's market, there's appetite for that, I think, with where the price of gold is going and where it is and where it seems to be going. I think assets like these, where you have multi-million ounce potential, are particularly valuable in Nevada, especially in the Walker Lane. So there's a lot of resources that are 500,000 to 1 million ounces with decent grade in the Walker Lane, but there's very few that have the potential to go north of 1 million, 1.5 million ounces. And that's really the size and scale of what we have here, is what we believe we're onto. But we do need to raise that. We do need to raise that money. We obviously want to do it as non-dilutively as possible and at higher levels than where we are today. We still think we're super cheap. So I think one of the things that really sets Scorpio apart from its peers, especially in Nevada, is the fact that we have a lot of infrastructure and permitting. So we have that 400 ton per day mill that has cash flow potential. We have Mineral Ridge, which is a fully permitted heap leach operation with infrastructure and a lot of money invested and a lot of production history under Scorpio, over nearly 300,000 ounces. Scorpio has produced nearly 300,000 ounces from Mineral Ridge. So I think it does really set us apart from our peers, and being able to leverage these assets and infrastructure for cash flow in the near term. And when I say near term, I mean within the next 12 months, that would create cash flow that we can then further reinvest in Manhattan to build that resource and do so non-dilutively.
Well, Zayn, let's get into that a little bit further, just because I think a lot of people listening will remember that, this is not just a brownfield site. This was a past producing site not that long ago. I remember in the bear market years watching Scorpio Gold and being invested in it and watching Mineral Ridge produce. So with these higher gold prices and very little spend, you had mentioned that there could be an option to fast track some production out of Mineral Ridge that would help feed the beast for Manhattan development. Could you maybe speak to that idea a little bit more, just kind of big picture?
Yeah, I've been very candid in talking and presenting the opportunity with Mineral Ridge over the past couple months. We do really believe there is an immediate value extraction opportunity there. So there's a proven and probable resource in the leach pad. There's a measured indicated resource in 2 of the satellite deposits on site. And we're talking multi-100,000 ounces of gold here. So the ultimate goal is trying to figure out what is the lowest capex / startup opex model that can allow us to extract gold in the shortest amount of time and be able to leverage today's gold price and generate free cash flow. And at the outset, it might seem easy, but there's just so many ways to skin the cat and so many different economic models that can make sense. So we've really invested the time over the past, call it 90 days, to really figure out what is the most economic way to extract value out of Mineral Ridge. And I think every day we get a little bit closer. We're very close to probably being able to put out some news about what that model is going to look like, what the time frame to get that cash flow is. But it does take time, and we just want to make sure we get it right, because with small scale production, there's obviously risks involved. And our focus as a company is really on multi-million ounce potential at Manhattan, and we don't want to dilute that. But at the same time, if we can extract cash flow from Mineral Ridge in the short term, be able to leverage that to invest in Manhattan, that's the ultimate goal. And I take that a step further too, that depending on the amount of cash that we can we can extract from Mineral Ridge, it will put us in a position where we do have the opportunity to further expand Mineral Ridge as well. We do believe that there is further exploration potential there. I would say that in a more bear market, in a market that's not nearly as hot, it's hard for a junior company to focus on more than one asset. So I always like to reiterate that Manhattan is our core focus. But as things heat up a little bit more, as the market turns a little bit, hopefully we start to see juniors start to pick up the market feels even a little bit hotter than it did even 6 weeks ago. But as things start to continue, and they do continue on the same trajectory we're at right now, I think then obviously Mineral Ridge does present a pretty exciting opportunity, and especially with the blue sky opportunity that North Star, which is the exploration ground adjacent to the mine, presents.
Oh, we have seen this model of bring something into production to create some cash flow. If done correctly, yes, it eliminates that whole need to go back to the market. But Zayn, you said you'll be coming out with some more info on it, but any estimates on how expensive it could be to bring Mineral Ridge into production, even if it is in a small production profile? What sort of cost would you need to allocate to that project, which would then take away from some of the ongoing exploration?
Yeah, so the money that we invest in that project, we ultimately believe will be non-dilutive. There's lots of appetite for gold right now from kind of like trading companies and non-dilutive finance partners, offtake agreements, etc. So we've been very active in discussions with a number of parties on that front. So ultimately, I do believe that money will kind of be non-dilutive in the sense it'll be probably an offtake agreement with a forward sale. But backing up a little bit, the numbers that we're targeting right now are between 5 and 6 million US, and that would be on the high end of what we believe where we think we can get the mine or be able to extract value out of the mine with.
Well, Zayn, as you said, the main focus is still Manhattan, so we do want to keep people focused there. But nice kicker here with Mineral Ridge, and like you say, exploration upside at North Star. Lots going on with the company. I guess wrap us up with some of the key catalysts you really want investors focused on as we round out this year and head to the beginning of next year.
Yeah, I would say keep an eye on the drill for the follow-up drill results for the rest of the program. Ultimately, working towards the resource in Q1 is going to be the big catalyst. We're targeting early Q1 2025, and then beyond that, I would say just keep an eye out for the cash flow opportunities. I think it'll be exciting to kind of see how the market responds. I think that there obviously is a lot of appetite for companies that can non-dilutively explore, and I think to be one of those companies at the forefront of that in Nevada in this gold market would be the best.
All right, Zayn, thank you very much for the update. Again, Zayn Kalyan, CEO of Scorpio Gold. Click that link in the show notes to visit the company's website and send us any questions you have for Zayn. We will also follow up on the back of the remainder of the drill results from this year's program and any more news we could get on potential production out of Mineral Ridge. Zayn, thank you very much for your time today.
Thanks, Cory. Appreciate it.